Hello, it's Tuesday, and we have the CPI coming out this morning. So let's kind of look at the market, see what's going on. Looks like everyone's chasing the Iran Hormuz oil headline. Yet gold fell 2%, and the loonie flatlined on an 8% crude spike because the dollar is the only safe haven at this point. And it seems like capital is quietly rotating out of megatech and into financials, defensives, that closed green yesterday. And we're seeing JPM's earnings came out. They're down pre-market. So that's kicking off the earnings week for bank. The entire hawkish-CPI bet seems like it already paid out Monday. And June's headline will probably read artificially soft on the June oil collapse. That looks like it just violently reversed. So the crowd's fading it as a dovish. So we'll see what happens. If you had to look at some stuff this morning, I would probably bring up the KRE, the financial ETF, XLE with the Hormuz supply shock stuff going on. Always look at healthcare. And then we have an interesting USD Canada with the petro-currency. Seems that it's refusing to rally. So that's pretty interesting. Let's go through some of the currency pairs. Pound seems to be vulnerable under that 870. And did I upload the wrong chart on that? I think I might have. That's weird. All right, USD/GPY. Energy inflation heavily disincentivizes any yen appreciation. I'm going to look at that. And the Euro USD looks like it's facing some overhead resistance there. Let's go through the positions, see what we have going on here. Okay, we're down to 11. Not too bad. Let's see here, CVS. CVS broke out of that consolidation that it's been, triggered a second buy that we had on deck, and now price is pushing down. So okay, so that's our other one. XLE seems to be benefiting from the oil stuff. Depending on how things go, we're getting closer to the target. The oil target, price target. Let me look at this tweet because I think I uploaded the wrong thing. Can I still edit that? Oh, nice. There, we're going to pause the pause this for a second. GP. Same thing. Interesting. Okay. All right. What else we got? XLE. Keeping an eye on that XLV. Seems like half of my book is just ETFs at this point. Lower volume pullback. Price remains stuck. Let's see. Okay. Microsoft, hopefully benefiting from the tech bid. Pre-market down, What are we seeing here? Just floating around on low volume. PBI. Okay, we're out of the range. Price tested the June 26 on low volume. Good. So strength, stop loss remains. Then I'm going to turn on the box scanner. And we'll walk you through what that looks like at the current iteration in a second. SRRK. Back at our entry on high volume. That's a little worrisome. It's another weakness, but I'm going to keep stop loss there. BLZE. So this is same volume as previous day. So it looks like this might be just some liquidity hunts happening. Moderate volume, lower volume almost, testing for support. Stop loss remains. Alright, what we got here? Alright, that is what it is. What is that saying? Oh, okay. NTB. Okay. Low volume as it tries to get out of the range. We're in profit, so else we take a small profit as we test the thesis. Okay, CSX. Okay, so CSX has been good to us. We had a little high volume green upthrust showing sign of strength, continuing out. I'm going to keep the stop loss open. I think high oil would make this not great, but all right, let's look and let's sync our positions and let's run the morning scan on the box breakout. So this is basically the vision model that we've been building based on chart patterns, and we'll see what it comes up with. We have to manually grade these for now. The model, we retrained the model a couple days ago, so it should be a little better, but we are having to retrain. We have to train, label the charts every morning, and then retrain it every week or so. We have the labels for good picks, but now we're actually waiting for outcomes. Once the position gets in there. While that comes back, let's go over the CPI stuff this morning. So CPI prints at 8:30. Cash opens 9:30, obviously. So let's kind of go through what this looks like here. So by the time 9:30 rolls around, the open will definitely have gapped on some sort of number. So if you were looking at some sort of long plays, if you were just like ETFs, it would be the KRE, the XLV, and the XLV, right? So scenario 1, we have a hot core, so equal or greater to 0.3% month over month. So hawkish, yields up, USD's up. The curve, bear steepens, tech sells harder. So you could get into the first buy on XLE. XLV you would add to it if you're not already in. Scenario 2 is in line with the core, so plus 0.2%. So watch for some dovish headlines, kind of knee-jerk that fades, and we're kind of looking at starters or add-on confirmation. So XLE you would enter, KRE starter, XLV you would basically hold. Low beta would grind either way, so there's no urgency there. So if we have a soft core equal to or less than 0.1% month over month and falling expectations, so that would be a dovish snapback. So we'd have a risk on rally, curve would reprice the cuts, hawkish cluster mean revert, so this is where you separate the longs basically. XLE you would keep or enter, KRE you would shrink to basically a starter, or you would just pass entirely, and then XLV you would not add, and you would essentially trim it. So we're not going to chase the 930 print, we're going to let it open, and we're going to look at some levels. Every stop above the equal to 1 ATR from spot, and so inside that's noise. And so these are just one rotational view on a hot core, energy defensives. On a soft core, only XLE stands. So we'll be watching that and seeing what happens. We got our scans. So I got to go through and grade these, and you can do it pretty quick. So we're looking for a consolidator, and consolidator has a certain pattern here that we're looking for, and we can kind of fly through this pretty quick because your eyes will get used to what it looks like. I know what a consolidator looks like, and I can tell a mile away, right? I'm just kind of watching this. I'm hitting the label, going through it. The interesting thing is as you go through it, you'll see stuff that's pretty interesting. This is actually a decent one. That's we have a buy order on that, which is pretty cool to see that. We're not able to get the runs this morning on the scan on SignalDeck. We're trying to get a huge release out, so we're going to be running the scanner later in the morning. So if you're waiting around for that as a member, just give it some time and we'll get that out. FSSL has been a extreme markdown. Okay. So again, we're just training by labeling. This is the hard part of the first part of this. Not super sexy, but it's part of it. Might give somebody a seizure. Okay, we're almost there. Okay. So now that they're trained, looks like this would be the watch list for the morning. So right now it's training the vision model, or the vision model is actually grading it. So you give it a second and they pop up. But so, okay, you just saw that AMBQ has an 80 vision model and an 81 standard model, showing tight horizontal price, visible ceiling and floors, suggesting accumulation activity. Scores high on the technical analysis criteria for Wyckoff accumulation setup. Good deal. So that does look pretty good. It gives you the buy and the sell side. So we may look into that. And then SIVA, that has a low score, but that is a good consolidation phase after pullback, but it does not demonstrate tight horizontal price range. So give us some time. But yeah, so that's a good update on where we're at with the vision model there. We have a few positions. We had three, I believe, profitable and one not. And we have Bark currently. We're in that and we're just kind of floating around. So in the position, just kind of hanging out. Let's look at the overall market real quick. We have the Novo Nordisk position. Or no, it's not a position, it's just an order. Walmart. Seeing pullback on NPLT. It's interesting. We had an order on CLPT, but it would have hit our stop. That's interesting. We'll keep watching it. Okay. Not too much there. Let's look at gold futures. See how that's doing. So we're definitely in the markdown phase. Hitting resistance on a low volume, which is not that great if you're trying to go long with it. So we'll watch how this handles in the CPI print and see where it goes from there. But yeah, we're just hanging out. Got a few options for CPI when the market opens. We're watching gold futures, seeing if there's any money there this morning, and we'll just see how it goes.